Well, the last day of the week for Indian indices in trade. However, let's have a quick look at how global indices performed over Wednesday as well as how Asian indices have opened up on Thursday morning. Home building in the US fell 0.7%, and of course, that means that there is a little bit of a negative sentiment with regard to US markets. Shares of Target, despite the retailer clocking better than expected earnings, still fell after its commentary on margins. Target expects Q3 margins to be hit due to supply chain issues as well as inflation. So clear commentary on how margin trajectory for Q3 will be, which has led to a fall in the stock price. And all three US indices, due to both of these factors, fell on Wednesday. The Dow was down over 0.5%, largely dragged by Visa, almost 5% down. The S&P 500 was down around 0.25% in trade, and the Nasdaq fell around 0.33% in trade on Wednesday. When you look at Europe, October inflation data for Europe came through, and that has come in at 4.1% when you look at it on a year-on-year basis. That's more than double of the ECB's target inflation. The ECB has warned also of stretched valuations in the property as well as the financial markets. UK CPI also came in slightly higher than anticipated at 3.9%. It's come in at 4.2%, which is the highest in a decade. While the DAX and the CAC, which is the German and the French indices respectively, were flat in trade, the FTSE fell around 0.5%, and the Stock 600 surprisingly continued to climb. It is up around 14 basis points in trade on Wednesday. When you come to Asia, Asian markets are pretty much in the red outside of Australia. So when you look at the Nikkei, it's down almost 4/5%. The Shanghai is down over 0.5% as we speak. The Hang Seng is down 1.25% as we speak, and the Kospi is down around 1/3%. The ASX 200 though continues to hold on to gains of around 14 basis points, small gains there. And the SGX Nifty futures is absolutely flat in trade early on Thursday. So that may not be such a bad cue for Indian indices. When you look at commodities, commodities have taken a beating. The London Metal Index has fallen, but when you look at it over the last month, it's down almost 10% in the last month. Aluminium, copper and iron ore have all fallen, with iron ore being the biggest of the three, falling over 25% in the last month or so. Oil prices also fell. Oil prices have fallen largely due to the International Energy Agency and OPEC warning of an oversupply, largely due to COVID factors. COVID is of course impacting the economy as well as the people in Europe, which could possibly be the reason why oil prices have fallen. Crude oil inventories in the US, though compensated for some of this fall, they have been coming lower than expected, and that means that oil has not fallen as much as it ought to have. Oil is currently at $77.75 a barrel. Gold has risen as inflation worries escalate, given the inflation in Europe as well as the commentary by US retailers. Gold is now at $1871 an ounce. The housing slip as well as inflation caused the 10-year US Treasury yields to fall just below the 1.6%. It's at around the 1.592% mark in early trade today morning. And Bitcoin, which had fallen below the $60,000 mark again yesterday, has just climbed just above the $60,000 mark in early trade today. A very interesting end to this week. Let's see how Indian markets respond to this.